We don't care what they do as a retailer, but we are concerned about the safety and soundness of the financial system. And this doesn't just relate to Walmart, it's any commercial industrial company getting into banking and the threats it can potentially cause.
That was former Ohio Congressman Paul Gilmore in 2007 after Walmart's failed attempt to get into banking. 14 years later, Walmart may be taking another look at taking on Wall Street, this time with two veterans from Goldman Sachs' Consumer Finance Division. They left Goldman this week to join a fintech startup backed by Walmart and Ribbit Capital. Omar Ismail was the head of Goldman's consumer bank named Marcus, launched in 2016. It was meant to get Goldman into the consumer business, but it's been slow to gain traction.
We want to be the leading digital banking platform. And the idea behind this is that we can be someone's holistic bank.
Efforts by retailers and startups to begin offering core banking products pits fintech against Wall Street.
Fintech, big tech, you saw Walmart recently. So we just have to be prepared for intensified competition. We're ready for it. We're very competitive and we expect to win.
Walmart has been trying to get into the banking business since the late 1990s. It first tried unsuccessfully to buy a bank in California. Then it tried again in 2005, applying for an industrial bank charter in Utah, which it hoped to use to process credit and debit card transactions internally. But the retailer faced a firestorm of opposition from lawmakers and banking industry groups. After 2 years and several delays, Walmart ultimately withdrew its application.
What we're trying to do here is to get people to be really open to embracing what's next.
Sheila Bair was the head of the FDIC when the agency temporarily suspended Walmart's banking ambitions and encouraged the retailer to partner with banks instead. I asked her what is different this time around.
I'm not sure much is different. There's financial technology has created new opportunities to provide financial services, especially in the payments space with larger returns. So it may be that Walmart views this as attractive. A lot of the policy arguments are the same. I think financial technology perhaps makes this more attractive now to Walmart. I can only speculate. They haven't really provided much public information about what their plans are.
As you say, most of the regulatory agencies disfavor a commercial entity owning a bank. There is an exception, this industrial bank, sort of an interesting phenomenon. What are the risks from not having the full regulatory force applied to something like a Walmart?
So I think their concentration of power. I think the traditional prohibition we've had on this is the concentration of power of very large commercial entities, being able to build banking empires too. That's a lot of concentrated power. So I think that's an issue. Also, the impact on community banks, given Walmart, could provide a lot of competition. I think there's a fear there that they could really hurt community banks. So that's really the policy arguments against it.
You mentioned, Sheila, the possible squeeze on local and community banks if the Walmarts of this world get into that business. Could there also be a squeeze on the bigger banks as a practical matter, as more and more big commercial entities come into their neighborhood and compete with them, for example, for deposit taking?
Yeah, well, there could very well be. And, again, it's that may be a benefit. We've had with this terrible pandemic, we've had an accelerating trend towards a lot of branches closing, remote provision of financial services. It's less cost. It doesn't involve people personally interacting with each other, which has become an issue with this pandemic. But there are still a lot of people who want a physical location to go to for their banking services. And Walmart can provide that with all its stores. Elderly people, people, lower income people who don't have access to the internet. The ability to also provide not just technologically remote services, but also a physical location, I think, is an advantage that Walmart could provide and a benefit to that segment of the population that still wants an actual banking physical space to go to. So yes, and in that context, their vast array of stores could be highly competitive with these larger banks' branch operations. So you're right, it's not clear that it would just be an impact on community banks.
Well, you raise a very interesting possibility, I think. We have talked for some time about the unbanked and the underbanked in the United States, typically in poorer communities, you suggest, and how we address that. We haven't been successful terribly in doing that. Could a Walmart moving in actually help address that problem in the country?
Well, I think they could. I mean, I think lower income and lower middle income Americans are a very big part of Walmart's customer base. And so they're coming to those stores already. So, yeah, I mean, I think we need to know what Walmart plans. If they just plan to, fatten their profit margins, well, good for them. But, that's not really a public policy reason to provide the charter, approve the charter. But if they can leverage that reach that they have with the unbanked and underbanked populations to provide a fuller panoply of financial services at low cost, at mainstream cost, right? So people can go to payday lenders and pawn shops now and get financial services at a very high cost. But if Walmart can further democratize credit and banking services and provide at the same cost that you and I get, then I think that would be hugely beneficial. So, we need to stay tuned in terms of what Walmart what the value proposition is that they're contemplating. But there's certainly a lot of potential there.
Well, talk about that value proposition. We can't get in Doug McMillan's head, I don't think. Certainly I can't. But he's made no secret of the fact that he's interested in moving into this. Why do you think that is? Because Walmart is at least part of a lot of financial services offered to its customers right now through distribution arrangements with regular banks, but also through direct relationships with its own customers.
Well, it is some crowded space, but I think there's probably a lot of money to be made by, again, internalizing it as opposed to doing it through bank partnerships. It's interesting. They seem to be really focused on financial technology as part, they were talking about creating some type of fintech entity, that's pretty crowded space already. It seems to me that they're stronger, their greater strength in this, their competitive strength, is their stores, right? They have physical locations. They can provide that, and they have a customer base that's ready-made. Those unbanked and underbanked that the mainstream banking organizations have not been able to reach, they're their customers already. So it seems to me that's their benefit, not so much utilizing financial technology that can help lower the cost of providing the services, but their strength is their pre-existing customer base and their physical facilities.